Welcome back to Real Estate Wisdom with Vish, the podcast where we go beyond the headlines and help you understand what's really happening in the Greater Toronto Area. And if you have been following the news lately, you have probably seen headlines like homeowners loses 1 million, power of sale listings surge, or housing market continues to soften. But here's the problem with headlines. They are designed to grab your attention. They rarely give you the complete story. A headline doesn't tell you why a homeowner lost hundreds of thousands of dollars. It doesn't explain why some neighborhoods are seeing more distress sales than others. And it certainly doesn't tell you what these changes mean for you if you are thinking about buying, selling, or investing. That's exactly what we are going to unpack today. Because behind every statistics is a real family, a real financial decision, and often a lesson that rest of us can learn from. Maybe they bought when interest rates were at historic lows. Maybe they stretched their budget because everyone believed prices would continue climbing forever. Maybe their mortgage payment doubled at renewal. Or maybe life simply happened. A job change, a divorce, illness, retirement, or relocation. Real estate has never been just about houses. It's about people. Today, we are taking a tour across the GTA from Brampton and Mississauga to Oakville, Burlington, Whitby, Ajax, Oshawa, Hamilton, and York region to answer three important questions. What's happening? Why is it happening? And most importantly, what does it mean for you? Because markets don't change overnight. They change one neighborhood, one mortgage renewal, and one sale at a time. Let's dive in. We all remember the market of 2021 and early 2022. Homes were receiving 20 or 30 offers. Buyers were waiving inspections. Financing conditions disappeared. People lined up outside open houses. Many believed prices could only move in one direction, and that is up. Fast forward to today, and some of those very same homes are selling for hundreds of thousands, and in some cases, over $1 million less than their purchase price. Let's start in Brampton. Ground zero. One 4-bedroom home sold recently for approximately $1.25 million. At the peak of the market, comparable homes in that area had sold for roughly $1 million more. Think about that for a moment. $1 million difference on one home. Local real estate professionals described it as a sign of growing trend. Bigger homes came with bigger mortgages. Those mortgages are now renewing at much higher interest rates. For some homeowners, the numbers simply no longer work. Here's another Brampton example. A 4-bedroom, 5-bathroom home purchased in April 2022 for approximately $1.91 million recently sold for about $1.15 million. That's roughly a $760,000 loss. The listing history tells an important story. The seller reduced the price several times over many months before finally finding a buyer. That wasn't one bad weekend. It was the market slowly telling the seller what buyers were actually willing to pay. And it's not just Brampton. Here in Oakville, one detached home that sold for approximately 2.9 million during the frenzy of 2022 eventually sold for well under 2 million after multiple relistings and price reductions. Again, over $1 million disappeared. Now, before we go any further, let's put these stories into perspective. These headlines can sound alarming, but it's important to remember that these are realized losses. Thousands of homeowners across the GTA haven't sold. If someone bought in 2022 but plans to live in their home for another 15 years, today's market value may have very little impact on their long-term financial outcome. The biggest challenges are affecting homeowners who must sell, not necessarily those who choose to stay. That's an important distinction. So, what's really driving this reset? Many people immediately point to interest rates. And yes, they are a major factor, but they are not the whole story. During 2020 and 2021, borrowing money was historically inexpensive. Buyers qualified for much larger mortgages than they would today. Competition exploded. Prices climbed much faster than incomes. Many people assumed low interest rates would continue for years. Then inflation arrived. The Bank of Canada responded by increasing interest rates rapidly. Mortgage renewals suddenly become much more expensive. Families that had comfortably managed their payments suddenly faced hundreds or even thousands of dollars in additional monthly costs. At the same time, economic uncertainty caused many buyers to wait on their sidelines. Demand didn't disappear. Confidence did. Today's buyers are still shopping. They are simply negotiating much harder. They are taking their time. They are comparing properties. They are asking for inspections again. And they are willing to walk away if the numbers don't make sense. That's a very different market than the one we experienced 4 years ago. Now, let's talk about something that often makes headlines: power of sale. Whenever people hear those words, many immediately think about the US housing crash in 2008. Ontario is different. A power of sale doesn't automatically mean an entire neighborhood is collapsing. It simply means a lender has started the legal process after mortgage obligations haven't been met. Many homeowners resolve the situation before the property is ever sold. Some refinance, some sell voluntarily, others negotiate with the lender. However, when power of sale listings begin increasing across multiple cities at the same time, professionals pay attention. Not because they are causing the market to weaken, because they are usually a symptom that financial stress is increasing. Across Ontario, power of sale listings have reached their highest levels in roughly 2 years. Much of that activity is concentrated in the Greater Toronto Area. Brampton has become one of the most closely watched markets. Many homeowners who purchased between 2020 and 2022 are now reaching their first mortgage renewal. The payment shock has been significant. Mississauga is experiencing similar challenges. What's interesting is that many of these homeowners weren't reckless buyers. Many had solid down payments. Many qualified under stress tests. But even responsible financial planning has limits when borrowing costs change dramatically. Across Durham region, including Whitby, Ajax, Oshawa, and Clarington, we are also seeing more distressed inventory entering the market. York region is experiencing similar patterns, although on a similar scale and often involving higher priced homes. Again, this doesn't mean every neighborhood is in trouble, but it does mean buyers have more choices and more negotiating power than they had in years. Now, let's move beyond distressed sales, because even ordinary homeowners are experiencing today's market. In Halton region, including Oakville, Burlington, and Milton, the majority of detached homes are selling below asking price. Think about how different that is from just a few years ago. Back then, asking price was simply the starting point. Today, asking price is often just the beginning of a negotiation. That doesn't mean every home is dropping in value. It means buyers are being selective. Well-priced homes still sell. Overpriced homes often sit. And every additional week on the market usually weakens a seller's negotiating position. This is one of the biggest mindset shifts seller needs to make. The market is no longer rewarding optimism. It's rewarding accuracy. Pricing your home based on what your neighbor sold for in early 2022 is no longer a strategy. It's wishful thinking. Today's buyers care about today's comparable sales, not yesterday's headlines. What this means for sellers? If you're thinking about selling, here's my advice. Don't chase the market. Price your home correctly from the very beginning. Many sellers believe they can start high and reduce later if necessary. The problem is that buyers are watching. Every price reduction sends a signal. They begin asking themselves, what's wrong with this property? How much lower will the seller go? Can I negotiate even further? Often the strongest offers come during the first week on the market, not after months of price reductions. Preparation matters. Professional photography matters. Marketing matters. And realistic pricing matters more today than it has in many years. What this means for buyers? Now, let's talk to buyers. This is probably the strongest negotiating environment we have seen since before the pandemic. But don't confuse a discount with a bargain. A home that's reduced by $200,000 isn't automatically a great purchase. Look deeper. Has it been sitting because it's overpriced? Does it require major repairs? Are there legal complications? Has financing fallen through previously? Study comparable sales. Review listing history. Understand the neighborhood. Good buying decisions aren't about finding the biggest discount. They are about finding the best long-term value. Remember, you make your profit when you buy wisely, not just when you sell. For investors and long-term homeowners, today's market offers an important reminder. Real estate has always moved in cycles. Booms, corrections, recovery, growth, then the cycle repeats. The people facing the biggest challenges today are often those who bought with maximum leverage during the hardest part of the market. That doesn't mean real estate is a bad investment. It means leverage magnifies both gains and losses. If you are investing today, focus on conservative financing. Make sure the numbers work today, not just if prices rise tomorrow. Plan for higher interest rates. Maintain cash reserves. Think 5 to 10 years ahead rather than 5 to 10 months. Patience has consistently outperformed speculation. So, after looking at Brampton, Mississauga, Oakville, Burlington, Whitby, Ajax, Oshawa, Hamilton, and York region, one message stands out. The GTA isn't one housing market anymore. It's a collection of neighborhood markets. Some areas are correcting faster, some are stabilizing. Others are quietly creating opportunities that simply didn't exist a couple of years ago. If you are selling, price for today's market, not yesterday's memories. If you're buying, be patient, be disciplined, and don't let emotion make your decisions. And if you are investing, remember that real estate has always rewarded preparation more than prediction. One question I hear all the time is, should I wait another year? The honest answer is this: nobody consistently predicts the exact bottom of the market. Nobody. What we can do is make smart decisions based on today's facts. Buy a home you can comfortably afford. Leave room in your monthly budget. Build an emergency fund. Think long term. Your home should support your life, not become your biggest source of stress. Every market cycle teaches us something. During rising markets, people believe prices can only go up. During falling markets, people believe prices can only go down. History tells us neither is true. Markets move in cycles. The winners are usually the people who stay informed, remain patient, and make decisions based on facts rather than fear. That's exactly why I created Real Estate Wisdom with Vish, to help you cut through the noise and make confident, informed resale decisions. If you found this episode valuable, I had really appreciated if you subscribed, left a review, and share it with someone who's thinking about buying, selling, or investing in the GTA. And if there's a city or neighborhood you had like me to analyze in a future episode, whether it's Oakville, Milton, Burlington, Mississauga, Brampton, Vaughan, Markham, Whitby, or anywhere else across the GTA, leave a comment or send me a message. I'd love to feature it in an upcoming episode. Until next time, I'm Vishal Kapoor, and this has been Real Estate Wisdom with Vish. Stay informed, stay patient, and remember, knowledge is your greatest investment. Bye for now. Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.